Hello folks, this is Jason Kendall with SFS Wealth Management. It's been said that you should never discuss politics in public, and while that's probably good advice, we can't help but wonder how this highly televised and ever increasingly intensifying election might affect markets this year. While we can't predict the future and there are no guarantees, we can take a look at history for some perspective. Here's a chart that shows us how the S&P 500 performed during the last 10 election years. You can see that with the notable exceptions of 2000 and 2008, the S&P has delivered positive returns in election years since 1976. Now, let's remember that in 2000 we had the dot-com crash, and in 2008 the financial crisis. This chart shows a history of election years and its relationship with the Dow Jones between 1990 and the last presidential election in 2012. From what I can see, there are two big takeaways from this chart. One, stocks tend to do well in presidential election years. On average, the Dow returns 7.4%. That's not too bad. The second point is that regardless of whether a Democrat or a Republican won the election, stocks perform better when the incumbent party won. Now, if we take a look at when this happened, then we can see that the reason probably had more to do with the economy and less to do with the election. All told, I think that we can say that elections don't have much of an effect on market returns. Now, that's not to say that we won't see volatility and uncertainty in the time period leading up to the election. That's probably a given simply because investors hate uncertainty. Now, as a voter, you want to focus on what's important to you and make decisions that resonate with your values and your perspective. But as an investor, take several steps back from all the rhetoric and all the hype and don't let them dictate your major financial decisions. If you have any questions about this video, or you would like to discuss your own personal financial situation, please give us a call at 765-453-3355.